We're not going to waste any time. We're going to jump straight into what you need to know for this upcoming week with CPI and FOMC looming overhead with the market selling off. Let's not waste any time. Straight onto the economic calendar, we can see that we have no news on Monday or Tuesday. Does that matter too much? No, because I'll tell you exactly why when we go onto the charts. The market is in play. The market is extremely volatile. There is bigger news at play than some basic economic events. However, we have FOMC minutes on Wednesday that will lightly influence the market. It's not as serious as a rate decision. However, it is still a significant red folder news event. Core CPI right after that, and we could see PPI on Friday. So a bit of an abbreviated schedule. However, it is going to be an action-packed one, and I need you guys to either be on point this week, pay attention to these levels, write these down, get around traders that know what they're doing, or sit on the sidelines, because this is going to be one of those weeks, if you're not paying attention, you will get taken out of the market before you could even think about what had happened. So first of all, we're going to start by looking at some different assets. We're going to really pay attention to what we see right here on SPY. We're going to be looking at SPY, QQQ, the underlying assets, and of course, because we trade futures, this isn't normally a huge concern for us. However, when you have big, heavily weighted assets in the index that are trading crazy ranges, these are going to influence the movement of the market. The movement, it's going to be dictated based on how these stocks are being depreciated or selling off or whatever the case may be. So we can see that we have Apple using some basic trend following strategies. We can see it's approaching the 200-day moving average. We can also see that this is potentially a break and retest of that previous area, this previous structure high. Now, you might be saying, Christian, what are you even talking about? When you're looking at assets such as stocks, they trade a little bit different than futures. So I use different approaches because there is an inherent supply and demand with the stock. Futures, a little more robotic. We're not going to delve too much into that. When what we see right here is we see assets are in a depreciation phase. They're being marked down. They're going on sale, fire sale, right? Buy, or do you just wait? That's the question you need to be asking yourself. When you see something like this, your first immediate reaction shouldn't be to buy with everything you have. It should be to gauge how are we reacting at the lows. Big move undoubtedly, but it doesn't mean we're at the lows, because look at what we have right here. I'm going to introduce you to our little friend VIX. VIX is going off. It's crazy. It's going crazy. Up at 50. I can't even remember the last time I've seen VIX up this high. Like you can see back here 2024, right? Like for a blip. This was insane with the close at the highs. VIX basically measures the volatility or the fear in the market. It heavily influences the pricing of options, and with that, you're influencing the movement of the overall market. The tail wags the dog in that scenario. Options are such a huge factor in driving markets higher or lower, and we're going to see more of that continue to unravel and unfold as trillions of dollars continue to be wiped out of the market. How much more do we got left, right? Those are the questions you got to be asking yourself. Let's go ahead and look at some of the other big boys on the watch list right here. We have Amazon dying, right? We're down to the 160s. Maybe we look for a bid down here. Let's go ahead and check out the weekly chart. I need you guys to be really focused on the weekly charts this week, as these are breaking out of huge consolidations in a lot of scenarios. We got to ask ourselves, are we at some point of fair value? It seems for a while with Amazon, this 170 is a psychological level. We can see that we react there, we sweep below, break above, and now we're coming back. So the question is, do we hold that area, or are we going to reach down here for the 200? Tesla, again, another one of the heavily depreciated stocks in the near term. We see all 2025 kind of been getting hammered, maybe rightfully so, maybe not, who knows? But what we see is we're back into this area of value. So when you have something like that, the question is there enough participants that will want to drive this higher and therefore influence the movement of NQ and ES as a result, which is what we care about. We don't care about Tesla all that much. However, it is still something you could be looking to trade. You know, you do have levels down here. And then if you do start to see consolidation and some sort of sign of strength, you have room up to maybe halfway. However, we're not trying to predict the market move. We're simply trying to prepare for a multitude of opportunities, whether that's to the upside or to the downside. So again, we're going to look at some more big boys. We have NVIDIA right here. NVIDIA, nice rounded top. Question is, do we get a little lower high and then continue lower? Are we going to revert all the way down to this consolidation? Was this all fluff? Was it imaginary? That's what we have to see. If you're not familiar with these types of conditions, if you never traded in a bear market, you have to understand that markets are going to seek fair value for these assets. If this is heavily overpriced and all of that China DeepSeek AI stuff, if that really impacted the price of NVIDIA's underlying value, then of course this is going to be the perfect time to sell it lower. However, we're not going to get too much into the weeds. Look at a few other names. We can look at some of the tech names. We can see strong trend, break of trend. Okay, so now do we get the lower high or do we get the higher low to go lower? We have all this volume down here for the meta. Now looking at Hood, so a few other names, we could see a lot of these names rallied up. So it's strong front side of the 2025, pull back to the mean, aka the moving average. And now are we going to potentially put in a lower high or a higher low right here? That's the question. Is this the sweep and we're done, or are we going to bid from there? We have a couple opportunities we could trade. Now on to the important stuff. Guys, if you appreciate this type of content, I want you to leave a like right now. And if you are interested in this type of analysis, these are the levels that I share in Discord. You can go ahead and check it out. I'll actually show you guys right here. You're more than welcome to join the Discord. We have many different channels. We got premium chat. We stream on here as well. We have areas where people share their accountability, show that they're locking out their risk settings before the day starts. We got everything you need. We got levels. I post them all in here. Everybody could see them. So take advantage of that resource if you're not already in the Discord. But on to the important stuff. Let's go ahead and start to look at baby girl NQ. What are you doing? Falling off a cliff, right? So what do we have here? We'll go ahead and start with the daily chart because I know a lot of you guys don't know what the weekly chart looks like as prop firm traders. However, the weekly chart is very important. On the daily chart, NQ, we can see that quite simply, lower high, right? And then you form, again, this other lower high where it's this break and retest. If you guys follow me on Twitter, I did tweet about a potential break and retest scenario, outline this area right here. And lo and behold, there we are, much, much, much lower. So I was essentially had to kind of consider over the weekend, how do I get more on size with these moves? And the answer is simple. It's just observe price and look for the momentum opportunities when there is risk that is reasonable, right? So you don't have to reinvent the wheel, just trade what works. Dig into your past examples and then go from there. So what are we specifically looking for on NQ? It is very, very simple, guys. You got to kind of consider where can we potentially go? So we swept these lows. So if you're looking at anywhere like here, where's your next target? I'm going to have to say it's somewhere down here. It's somewhere down there. Do I think we go straight down? I don't know. I would think, but again, remember, we don't need to think as traders. We just need to trade. I would make the assumption that we might do something like this and then go lower. I hope that makes sense to you guys. Form a little lower high and then go lower. Maybe you get a little inside day right here. Maybe you gap lower, maybe you gap higher, who knows? But if you get a little bit of a consolidation day, maybe you get a 1, 2, 3 continuation move with the daily chart. So that's what we're looking at right here on NQ. We're looking at the daily chart. We can see that, again, this has just been a massive sell-off all year from pretty much end of February, March, tanking. Barely any sign of a pulse. This has been accelerated by the tariffs, all of these retaliatory tariffs with Trump. A lot of the art of the deal going on. There's a lot of stuff under the hood going on that a lot of us don't really care to get too deeply involved in. However, it is affecting everybody that is involved in the market. So one thing I do recommend to you guys is you definitely play it safe. I do not think you should be over leveraging or over risking. I think you guys should try to stay super consistent with the amount of risk that you're taking. One thing that I'm doing this week is I'm going to be trading with less size on my top one futures accounts. I'm going to be copy trading them, of course. I use the 350Ks. If you guys are interested, we're running a deal the rest of the month. Feel free to check out some of the pricing. Use code DTA, you get half off. So do that. Check it out. These are accounts that are ready to go, instant funded. You sign up, instant funded, ready to go straight in the market. You trade on Project X, which, if you're not familiar, it's my favorite platform to use. Right here, very simple. You got trading view charts, your depth of market right here, and you get copy trading. What more could you ask for? Copy trading 450K, $500,000. That's not bad. You get that for $1,200. Not bad. So we'll continue with the review because we do have to go over ES, and don't think for a second that ES doesn't matter. I promise you ES is extremely significant because we don't just have NQ. I know a lot of people think there's only NQ. ES is a much more significant market. And now look at ES is actually accelerating in the sell-off. That's weird. NQ's been weaker the whole time. Where are we at on ES? We're all the way down here. You see the difference? So the question is, where are we at within this range? If we go from low to high on the continuous contract, all the way over here, and we span it out. Are we there yet? Where are we at on the monthly? Are we there yet? So we have a monthly order block. We might be approaching that monthly order block very soon. This is a level I'd be very concerned with. If we get down to here, this basically 5,000 area, I would be very interested in looking for a potential bid anywhere in this range, essentially. I would be looking for buyers to step in. As you see, they broke above, right? If we come back, you get that break and retest to then potentially trade back into the highs into the end of the year. You're still young, guys. We're barely starting the second quarter. Let's play this out the long game, right? Where are we going to likely bounce? Somewhere here, somewhere here, somewhere here. Somewhere. Do you need to be the first one in? No. What you do need is to not have a bias, because the only thing that is going to keep you free and able to be flexible in these markets is your inability to stick to one side of the trade. Just say, you know what? I'm going to stick to my edge. Whatever my setup presents, I'm going to take that. I don't need to be right. I don't need to be wrong. I don't need to be bullish. I need to be on the right side of the market. And that's what you need to consistently reinforce, because there's no such thing as too far gone in these types of markets. You have to remember, markets can go much further than you ever thought possible. There's hundreds, thousands of examples of that throughout history. So with that being said, we have the two markets. Essentially what I'm going to be considering, these are all levels. Again, I put in the Discord. Feel free to check those out. I'm looking really just, it's this area, right? Are we going to hold this 5,200? If not, are we going to hold 5,100? And if not, are we going to hold 5,000? You might be saying, Christian, are those some big ranges? Yes. However, the ATR is through the moon. So when the ATR is 130 on ES, that means every daily candle is moving about 130 points. That's massive. You need to be prepared. That means you need to be sized down, because these 1 minute candles are probably a lot bigger than what you would have ever thought possible. Look, we got one right here. 27 points on 1 minute candle for ES. That's massive. 27 points is like a really big trade for ES. So be careful. This is snap neck volatility, which is why I like the 150Ks. If you trade a 150K account, instant funded, you get $6,000 in drawdown. If you use the no daily loss limit add-on, you can go ahead and use that all in one day. I don't. I risk $1,000 a day on these, so my max risk is $3,000 for the day. I keep it simple. I'm trying to keep it consistent, build towards that bigger payout. But with that, I am being cautious in these markets. I'm going to size down. I'm going to play it safe, and I'm going to trade, most importantly, at my premium levels. I'm going to be focused on those levels specifically. And if I do not see those levels in play, if I do not see it in the pre-market plan that I post every single day before this stream, if I do not see those levels, I'm not trading it. I will simply wait and align with the opportunity that makes the most sense. So not just ES, but we also have YM. We can't forget old reliable YM. Let's see where we're at. Yep, does not look great, right? None of these assets look great. YM, you have this consolidation down here, you're breaking. So the question is, are we just dipping our toe in the water just to run higher? Or are we going to be seeing some more sustained downside in the near term? That's $1 million question you got to be asking yourself, but you're not trying to predict it, because this is not a lottery. I promise you that one lucky trade, you'll give it back. So just focus on doing what is repeatable, stick to your process, and ultimately always respect your rules, guys. These are something, if you do not respect your rules, you're never going to make it as a trader, because you will lose that confidence that you have. You need to trust your edge, and you need to trust your ability to follow your edge. So we'll look at a couple other markets. YM right here, I mean, throw up on the weekly chart, you can see still kind of the same thing. Throw up a fib. When you're looking at these higher time frames and there's a lot of correlations kind of cracking, I mean, I would definitely recommend looking at like pullback areas like we're doing right here. So you have 61.8. So you could probably do 78.6. And you can see you're pretty much probably at the 70 point. 70% pullback, right, from the high to low. And that's essentially, these are areas where you might start to see bounces, right? You get the sweep of the lows right here, sweep of the lows right here. So then are we going to return higher? Probably not in 1 week, but we might in a couple weeks. So I'm thinking somewhere in this area, maybe these 500 points, give or take on NQ, probably start to see a bounce, probably start to see a low form. I think, yeah, this area right here, you get this, a break. So then the question is, are we going to hold this area? What does this look like on a 4 hour? Just fall in, right? You kind of flip over. Let's see, what do we have? Let's go right here. Look at some of the near-term structure. If we look at some of the volume session profiles, we can see that based on midnight open profiles, they've been pretty weak. So you had that initial push higher. You have all this just asking to get ran. You have all this right here. So it comes back, feeds into it, and dips. And so you get these little pockets. So what I was telling The premium members is essentially, if we can look at essentially anything above 18, 18.2, like 18.6, I'm looking at these basically these 200-point little nibbles. If we're going to get back above this, value area right here, trade it back to the midnight open. That's essentially what I would want to trade, this little pocket. However, if we do not get anywhere near that and we still stay stagnant below the prior day point of control, then I'll look to trade it to the downside and look to get on sides with bearish arrays. So I'm keeping the game plan very simple. I am flexible in regards to being able to catch upside, because you have to remember every weekly candle is going to have an initial move and then a final move, barring a consolidation, of course, but there's going to be that kind of back and forth. So you could potentially get that early short for it to go long the rest of the week, or it could rally a little bit and then you get that sell-off of doom where your grandparents are asking what happened to their 401k. So hope you guys learned something. If this type of content helps you, leave a like. Tell me something that you did not know. Tell me anything. Leave any sort of comment below. I do not care. Tell me any questions, whatever you got. Drop it down below. We'll talk soon, and take care. Till next time.